Alrighty, folks, how are we today? My name is Andrew Taranto, and this is Arcane Investments. So today is a very important day. I am very excited to share with you guys the stocks that we're involved in, our weekly performance, of course, which is still having a go of it. Obviously, option trading is definitely going to show some crazy volatility. So another red week on the performance. However, that isn't really the highlight of today's episode so much as we're going to go ahead and break down a couple companies that we got involved in. And the one that I'm super excited about, and then the other few that, I definitely see some upside, but nothing too wild on that front. So from a micro cap standpoint, we'll start with the micro cap, because I think that's the one everyone likes to talk about, right? Like everybody wants to talk about the penny, so let's talk about the penny. What's the new penny that I like? So the last penny that I brought up was a BOR and ITP. I believe those are two pennies. I had brought up BOR. I did a video on DPW. Now this company is extremely, extremely interesting, and I fundamentally am flabbergasted at the company's stock price in relative sense to its value. When we look at the stock's performance of late, first of all, we can see that there's definitely reasons to if you were to just look at this company as a stock, you would be like, oh, it's an awful company, right? You would look at it as though the company was just simply not functioning at all. And there's definitely been a strong pressure to short the company. And whether or not the price target I give is the reason it should be, we can all agree that it should 100% be higher. So, forgive me. So let's hop into this company and what they do. So this is a holding company. So a holding company, to sort of go into it, a holding company essentially has obviously a bunch of subsidiaries and private equity earnings that basically have large stakes in what this company kind of labels as undervalued companies. They have large stakes in these undervalued companies that they look to see and greatly kind of either, bring in their own management and sort of start looking to increase revenues from these companies. Now, this whole private equity sphere can get very dicey. It can get very, there's a lot of ethical gray areas. And, excuse me, a reason why this company specifically has maybe experienced some of those gray areas is the general consensus that it is an unethical leadership, or there are issues with the management and misleading information to stockholders. And there has been quite a push to short the company and ensure its demise. However, given all of that, even given all those headwinds, which obviously market capitalization headwinds can definitely impact severely a holding company, based on its ability to meet certain obligations. Oh my God. Whether that be a stock obligation, once you get started, you can't stop. Whether that be a stock obligation, probably just dehydrated. Whether that be a stock obligation or an obligation regarding the company's, or I'm not sorry, not a stock obligation, or an obligation regarding maybe a contract with your subsidiary, like you need to give us X amount of money, and and making these maybe off of at least some margin of safety off of your market capitalization, which is fundamentally difficult. So with that being said, we can definitely tell that during certain periods of looking, I'm assuming needing to pay off certain debt obligations, which they did do. They did end up issuing some stock, and when we look at the numbers on the right here, if it's too small on your screen, they have a PB ratio of 55 cents. 55. So about half of their book value. They're being traded at half of book value, as if this company is just about to disappear when they just made $42 million on their net income. Folks, if I've ever seen a value investment, this is it. This is just hits every single one of my criterias. I've listened to their earnings. I understand what the company does. I've done the market research. I've looked at the financials. Everything is in the direction that I want it to be. I'm fundamentally happy with the direction of the company and where it's going. And even if I don't maybe support the management, maybe I think the management's a little bit weird. I mean, they do have weird management. No one's going to deny that. But let's go to the management for a second, go to the profiles, go to the insiders, and we can see AULT, Milton, if you will, has bought 800,000 shares, 700,000 shares, and has increased his position, you can see, to now owning 4.6 million shares of this company. If we see when he did that, we can see right here, the beginning of September, he made some smaller buys, and right towards the end of September, guys, I'm talking a week ago, this guy made tons and tons of buys on this company. So a massive increase in ownership and his own belief in the company. There was one very small sale, which looks like more or less like a housekeeping. And it's looking like over the last few months, he's been making steady buys into this company at the rate of around 10,000 shares, 25,000, 50,000, and sort of steadily increasing, we can see, and now to the tune of 800,000 shares. So quite a bit of money invested. I'm not sure, I think that might be shares or share price. I'm not sure, but regardless, it's a massive amount of money being brought into it. And we really don't see any selling also at all, really at all. So, I mean, there's this one Smith guy sold $4. I don't know what that was all about. Maybe it was just a clerical thing. Institutions, on the other hand, have increased. Morgan Stanley has increased their position by 563,000 in June, and you can see that there were some small decreases. Citadel Capital, Citadel Advisors, I guess Tower Research, but they might have increased it. But regardless, there's quite a few people kind of involved in the company. I mean, from an institutional standpoint, I think there is certainly going to be BlackRock bought in June. So we do have big names in this company. It is obviously a very strong company that does own many subsidiaries. So that's another question is, what is the company? What do they actually do? So they're basically a holding company, which means they have many companies under the DPW umbrella. Essentially, that's the best way to describe it. And these companies are undervalued, value investments, as the CEO puts it. And they go in and they look to, inject management, inject ideas and capital to get them profitable and get them moving. A lot of these companies that they might get involved into, or at least the one I'm thinking of is their defense company, Grayson or something like that. You can look it up on their website, but they specifically just gave them capital, and you could see the revenues instantly increasing just because sometimes you do need just a very large private investment to get that going, just because sometimes so much of your backlog are just capital restrictions. So with that being said, there is more than enough of a reason to buy at this price to feel very safe about this investment and feel very good about it. So given the tremendous amount of insider action, given the tremendous amount of price deflation over the last year or so, and the amount of people shorting it, I think it's fair to say this is definitely a company that I will be buying quite a bit and hoping to do quite well in. So that's going to lead me into another idea. I'm still heavy into ASXC. For those of you, I just want to bring up DPW will be taking up some of my portfolio here. Now, when we go to, I'm going to go into my stocks here, and we're going to look at my allocation. Now, I'm going to change, based off of today's performance, I'm going to change DPW's allocation to 30% of my portfolio. And we're going to actually reduce ASXC down to about 35% of our portfolio. And that's because we want to kind of separate it between ASXC and DPW, the large chunk of my portfolio. However, we still want to make sure we have those other kind of three blue chippers kind of chipping away and giving us a decent revenue stream. Now, whether or not I stick with this is definitely going to be a fascinating element, because a part of me is so bullish on DPW and ASXC. I feel like I might be over diversifying when I go into these many companies. So we might move away from ELY and JetBlue and AT&T just for the time being, up until we can see, we'll have to see. We might, just because of how bullish I am on DPW, how like certain I feel. Once again, guys, this is, don't take this as financial advice. Don't come sue me if I'm wrong. But I personally am massively upsided on DPW. So a part of me really does want to just say DPW and ASXC. That's it, right? And then ASXC, obviously, we already know why it has so much potential. But I would even argue that DPW at this rate would be a better investment than ASXC, just because of how profitable DPW is in the moment, whereas ASXC does need to take some time to get there. And we will be increasing our portfolio size to the tune of about, let's say, we'll total it out at 3,000, right? So we'll be looking at putting $1,000 in both ASXC and DPW, and maybe having the rest in JetBlue, AT&T, and ELY. But I'm thinking to myself, I might just say screw that and go 1,500 in both, and just say that's going to be my portfolio, and just kind of start buying in both of those at like $150 increments, just because they're both super attractive right now from a price standpoint. And to be honest with you, as much as I do think JetBlue, AT&T, and ELY all have potential, I see these growing maybe 15% for JetBlue, right? Over the year, AT&T, maybe another 15%, ELY, same thing. I see maybe 15% growth here. Whereas with ASXC, I think we could see, we could probably see around 15%, but I think there's longer term prospects of upwards to like a few %. So that's why I think maybe this year we might not see it, maybe not even next year if you look at their projections. But if you look into DPW, I think we're looking at something really special in terms of percentage growth. So I'm looking to get involved as quickly as humanly possible. But I still want to make sure I'm sticking with ASXC and we're doing well there, because that is such a special company as well, and I don't want to miss out on that. Now, do I think JetBlue, AT&T, and ALY have great potential? 100%. Am I, skeptical of their total rate of return? Yeah, definitely. JetBlue could really just sit and do nothing for the longest time. And a part of me feels like, why am I going to continue pumping money into something like that in the end, might give me 45% rate of return over 5 years, or something that just may be too small. Although it is a safe and smart investment, I do feel as though DPW has so much more upside and has such a great margin of safety. Now, if I were to be looking at JetBlue at like $6 or something like that, then I'd be like, okay, yeah, sure. Like, that definitely deserves more in my portfolio. But I think at $15 still, JetBlue has a tremendous lack of movement. I think for some portfolios, it's definitely good. However, for mine, I think I might move away from it. So we might just switch to an ASXC DPW portfolio only, and essentially just try to grow those positions organically in and of themselves, and just see what's the best we can do. And I think that we'll have good results with DPW. I'm very, very, very bullish on the stock. I'm very excited to see what happens. If I'm wrong, I'm wrong. But I think that would take quite a bit of bad luck at this rate, just because of how good the numbers look, how far off they are from their 52-week high, the steady amount of the lack of volume, the steady amount of growth, the lack of profited shares at market close. And I can't look at it here, but DPW RSI, I wonder if I can actually look at this here with an RSI of, see, like here, this is what we love to see. This is what we love to see, guys. Sell, 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 sell. This is when we really have to ask ourselves, like this is good stuff. Like, we want technical analysis to say sell. That's when we want to buy. That's the truth of it, guys. So I'm trying to see where the RSI is, though. Where are the ISI? It doesn't say RSI anywhere here. I love that. Love that for myself. Relative Strength Index. There we go. Okay, so the RSI is at about 43.65, which is definitely buyable. Obviously, we want something a little bit lower, but I think we'll be okay with that. Actually, as a matter of fact, since we have RSI, this is one of my favorite technical indicators to buy. Let's look at ASXC's RSI at about 38, so definitely looking good. Whereas JetBlue, what's the stock ticker for JetBlue? Let me see here. JBU is 50, so that's a little bit higher. T, 38, not bad, good value. ELY, about 40. So these are all pretty low RSI strong stocks that I'm, looking into. So we're looking to get in low, guys, and wait to see these things go up. And obviously with ELY, it's touched maybe 37 on the RSI, whereas, let's see, T kind of started touching 34, but T is pretty low actually. Right now it looked like it's sitting actually at, I guess, a 14-day average is 38, 14-month maybe, I'm not sure, but the current is 27 if I'm looking at that correctly. If I'm seeing this, if these are the numbers on the right, then I would say it's probably 37. Wow, 27. Wow, that is super on sale. And JBLU. Oh, no, that's the stock price. Okay, now I understand. Okay, so that's the stock price. Okay. It's a little confusing because it's so close. But the relative strength index is kind of difficult to see on this graph. It doesn't actually gives you the RSI down here, actually, all the way at the bottom. So let's go back to T and look at that again. And we can see it sort of coming up maybe in May and kind of falling down and being down for quite some time now. And then we have ASXC, which we can see had quite a high RSI towards June, and seeing that same sort of trough period occurring with the RSI. And I think that's something we want to remember, is that the 380 peak is definitely something we want to be looking at in terms of its most recent high. And then DPW, we can see has an RSI of about 43. So it's definitely trending a little bit higher, and you can see it's definitely something that every time it feels like it wants to go up, someone's kicking it down. So it's still in that position right now where we can see at least for the short term, we might be able to see some very solid growth here. I think that's all the ones we have. Yeah, we already looked at all those. So yeah, so we might be closing out on DPW, JetBlue, and AT&T, or JetBlue, AT&T, and ELY, just because I just feel so confident about DPW and I want to get involved. And I just feel like it has more upside than JetBlue, AT&T, and EOY. So yeah, I think it's a bit riskier, I guess some people might say, but I'd rather take that risk. I feel more confident in my youth now to take that risk. If I was older, if I was I'm 24 now, so if I was in my late 30s, that would be probably the last time I'd buy something like this. And then probably around like my 40s and 50s, I definitely wouldn't touch it, especially if my net worth is a lot higher. So I think given what I know about the company, and given the current stock price, and given the fact that the insider is buying and the CEO is buying so many shares, I think it's more than enough of an indicator. But I guess I'll give you guys my end of week results, just because we have been going on forever now. We'll go over that. It's going to be, like I said, a very long video. So obviously we lost a chunk of the money today. We were doing all right on the week for a little bit. And actually, as a matter of fact, so this right here all happened on the 9/4. So this, you could see this kind of happened right here, right? Where we saw that. So it kind of started right out the gate on that Monday. And then as, the week sort of continued, we sort of had a little bit of a rise, and I was hoping that we'd be able to end the week at least up here, or, obviously up here. But, yeah, we did end up seeing it come back down. And, once again, nothing too crazy in terms of the movements between the individual stocks. I mean, only down 3% on Ascensus Surgical, and DPW's on the week was down about 9%. So that's actually why I'm so bullish too, is I really want to get involved into a company that's so far down. But you can see how we've allocated our portfolio. We got some JetBlue, which is down 6% on the week, AT&T down 1% on the week, and ELY down 4% on the week. So, definitely, not a great week across the board, honestly. But I'm still very bullish on my picks, and I think that time will tell. I believe that's what happened with Bohr, and I believe that's what's happening with Bohr, and I believe that's what's going to happen with ASXC and DPW. So, yeah, there's not really a lot to go into. I'm not even going to really break down the positions particularly, just because they're not really too, and like you saw the allocation sheet, you can see how I'm separating the money. I have a call, but I'll probably end up selling this to buy more DPW. So I think we're going to probably look to move most of our fund into ASXC and DPW, and those will be the two stocks that I feel very confident about in terms of growth. So when it happens, I don't know. But it's really just an inevitability. ASXC more so, just because I know more about it, and it's kind of more or less to me a sure thing. It's just a matter of time, and whether or not the stock market wants to react, well after it does well, which it might. The stock market might not even care about ASXC until it's like super profitable, and then they'll be like, all right, fine, we'll invest. Or they might just be like, oh, okay, they're good now. Let's all get in and try to buy as much as we can, like they did prior. So we don't know whether or not they're going to kind of reapproach the company just because of its past and the stockholders' own wariness towards just believing that the stock will just keep going up, or that their earnings will keep going up. So I think that's definitely going to take some time. So we could see ASXC taking a little bit longer, but and DPW may be happening a little sooner. But that still doesn't really make me feel too negative towards ASXC. And it's really just about where we're going to put this giant buy that we're going to have next week. So next week, I believe, should be the week in which we have like the giant portfolio increase. I believe that's when we're going to do it. Hopefully these prices stay low and we can get in. Hopefully they go lower. That would be really incredible, actually. So we're hoping for DPW and ASXC to have a bad week, or at least up until the moment when we buy in. And we will kind of just see what happens from there. But for now, I feel very confident and I'm very excited for the future. So once again, join the Discord. We can talk more about DPW, talk more about all the separate stocks, and why I bought them, why I chose them. And although I might be selling out of AT&T, JetBlue, and EOY, it's for reasons of just because of how much I love DPW and ASXC, and not because I don't like those companies. I think if you're willing to take on a less risk, I think that those could be fundamentally really amazing companies down the line. And or not amazing companies, they are already amazing companies, but amazing stocks, and really see some tremendous value out of them. My biggest fear obviously is AT&T, just because they are part of someone who has, or I forget the name of the section in the spider, but they definitely have a ton of money that should be coming into them, and I fear if there is a market shakeup that AT&T will potentially not survive that or go very, very low. Yeah, so that's about it, guys. Thank you so much for joining me. I am going to head out. I will see you next week, and I will obviously keep you up to date on my buying in the Discord. All right? Have a great rest of your weekend, guys, or have a great weekend. Have a great rest of your day. All right, bye.